Well, good afternoon. I'm Greg Smith with FT Partners. For those of you that don't know us, we are really the only global investment bank focused exclusively on fintech. We've been around for 22 years, do nothing but help fintech companies raise capital or sell. I'm extremely excited to be here with my panelists. I realized I'm now in my fourth decade of fintech, so I've definitely had an interesting seat at the table watching fintech develop from a global perspective, and I'm certainly excited about the region we're in here, whether it's the GCC, broader Middle East. We have clients here. We're starting to spend a lot of time in the region, so certainly excited about what's happening. And just to be efficient with our time, I'm going to introduce each of our panelists quickly, and then we will jump right in. We do have lots of different topics we could touch on, but I think we'll have an interesting dynamic panel. So to my left is Jose Marin. He's a serial entrepreneur turned investor, and he's the founder and managing director of FJ Labs, where he manages over $1 billion in capital with a differentiated venture investing strategy, doing angel investing at scale, but he's got a great global perspective. Next, we have Sonia Gokhale, who is a founding partner of VentureSouk, which is a MENA-based venture capital fund manager with a global portfolio. She manages thematic funds, especially focused on fintech and climate tech. And Sonia was previously a consultant to the Global Special Situations Group of Abu Dhabi Investment Council. And then on our far end, we've got Or Liban, who's a leader in the fintech and payments industry. Or has held prominent roles at Google and Airwallex, and he's currently driving Airwallex expansion into new regions, including the Middle East, leverages his extensive experience and deep understanding of the market. So with that, let's just kick off from a very high level. I'd love to just get each of your thoughts on sort of thinking about how the environment is today versus maybe 2021. Obviously, we're at highs, some lows. You know, sort of where are we today, and thinking about your business, how you're operating differently, what's really on your mind right now? Let's start with you, Jose.
Yeah, thank you guys. It's a pleasure to be here. Love what is going on here in the region, so thanks for having us. What I can say here is that the biggest driver of liquidity in tech are interest rates. And of course, as the interest rates go up, we finish an incredible set of years where where was an amazing bonanza. Now, the interest rates went up. The U.S. managed, not by printing money, not to go into a recession. And I think that's starting to show now with a slight reduction of interest rates. But I think that's my personal opinion, that the next couple of years, interest rates are not going to be as low as they were before. And we're going to have to live with that new reality. Now, having said that, we start to see somewhat of a reactivation, at least in terms of planning of liquidity and IPOs. There's a number of IPOs that are lining up, for next year. Having said that, clearly the level of activity that we are seeing is dramatically lower, no? And, for an investor, liquidity is probably the single most important factor that people look at, no? And when you have crises outside of the US, generally capital goes back to the US. And we've been seeing a very strong, reflow of capital and very strong reductions everywhere in terms of venture investing, but more dramatically so outside of the US, no? So when you look to the amount of capital that has been invested, has dropped much more outside of the US than in the US. So that doesn't mean there's not opportunity. I think that the opportunities to invest right now in potential new unicorns are amazing. If you think about companies like Airbnb or others were built in recession years. So as an investor, I think that this is an incredible time to be aggressive. And I like the commitment of a lot of the investors here in the region, where they are maybe a little bit less cyclical than what we see with institutional money in the US, which I think it's going to pay back very, very strongly for the investors here.
Great, great. Lots of good points. We'll try to hit on a few of those further. But Sonia, what's on your mind? How are things different today versus a few years ago?
This market is a bit different from the rest of the world. There's idiosyncrasies of this market that are important to note. So yes, we did experience same interest rate issues. You know, we had a lot of capital that kind of stopped flowing into VC, and a lot of that was capital from outside the region. That being said, we had a lot of capital inside the region that was continuing to flow and continuing to go to the ecosystem. And a lot of that is developmental. A lot of the sovereigns have continued to invest from 2021 to now. So there was a bit of an insulation in this ecosystem, which allowed us in this ecosystem to continue to grow and innovate. What's interesting, what's been happening here is the market in the MENA region, particularly in the GCC, is still nascent. It's still growing, it's still innovating. We're still building companies here that have existed in other markets for a while. Because of the support of the government, the easing of regulation, the capital that continuing to come from the sovereigns, it's been able to allow us to continue to grow and develop and build companies even during these high interest rates environments. When we see that coming back, then we'll see a lot of the capital from the rest of the world flowing back into this region. Because we've continued to grow, these companies are now getting to a place where they can attract U.S. capital or global capital. We've had, considering we're talking about unicorns right now, Hossam, who was on the panel right before us, is a portfolio company of Intersuk, is Tabby Buy Now Pay Later, has done extremely well even during these interest rate times, and has became a unicorn and then some. Their last round, I think they were valued at 1.5 billion. And have grown significantly since then, so we would value them probably much higher now. They attracted global investment into their company, and so even during this kind of rough time, they were still able to sell. So there's a bit of insulation in this region that we've been able to benefit from.
Great, great. Or you've got a little bit of a different perspective as an operator. How are things different for you and what you do at Airwallex kind of today versus a few years ago?
So, we're talking about unicorns here, and Airwallex is one of the most successful unicorns that came out of Australia back in 2015. We're a B2B payment infrastructure to manage all of our customers, basically financial operations end to end. And I think we see similarities to what was discussed here before. It's basically about moving from growth at all costs to efficient and smart growth, more focused on the revenue, more focused on the profits that we can deliver, and staying true to our customers at the end of the day. And because we're a global company, there are pockets where the situation is starting to get much better in recent years versus where we were before, and we're working very closely with our clients to scale it. But I think that I do agree with our panelists here about the situation. The situation today is different than before. The cost of capital is still higher than what was before, but we see optimism in the markets. You see companies like Klarna and others talking about IPO, so waiting to see how that develops.
Got it.
If I might just add something, I think from the perspective of entrepreneurs outside of the US, it has become, and as it has been said, this region is probably a bit insulated, but it's been a very dramatic transformation of how easy it is for companies, to raise capital. And that's something that, has put down a whole bunch of companies that had great concepts, but they just couldn't raise money.
Yep.
And we've seen a very tough situation for founders outside of the US, even in the US, that we're facing this. And the type of things that investors are looking for have also changed dramatically. Before people wanted to see top-line growth, people were not thinking about unit economics, capital efficiency was not necessarily that relevant, and I think probably you can attest, running a business today, you have to think about things very, very differently. I mean, you have to think about
KPIs matter.
how do I make money, you know, and how do I make sure that, you know, the capital that I'm using has a payback, you know, and in a lot of cases, how do I bring my business to profitability? How do I raise enough money to be able to get the company, you know, self-sustained? No? So it's a very different world, but that doesn't mean that there's no capital and that there's not amazing opportunities, as said before. No?
I think
But that's also a good thing. It's a really good thing that we were able to get companies now to like reset the way they think, have a bit of a correction in place, and now let's now focus on building profitable companies, which was just absolutely not happening in the past. And now we're able to, we as investors are able to say, okay, look, show me your gross margin, show me this company, how profitable it's going to become. And we're all better off for it, to be honest.
We all got a little sober, which is a good thing.
I think to that, you know, what worked well for us is that because we started in APAC, which is a different environment than the US, we were very focused from the beginning on those KPIs, basically, which allowed us to come into this season, I would say, in a much better situation. And our product is also pretty wide, so we have different angles to the business than if one's having difficulties, another one kind of comes up. So
Great.
That's the reason.
You know, the title of this panel is Has the Unicorn Machine Stopped Working? And hopefully everybody agrees the answer is no. But just thinking about a unicorn, what does it take? What is really the most, you know, sort of the most important characteristics? Is it really about profitability? You know, how should you think about growth, the TAM? Just help us understand how you, as investors, you both really think about what it kind of takes to become a unicorn today.
I mean, let me just say that the only way to make money in venture, at least in our model, is not necessarily by only investing in unicorns. No, I mean, you can make a lot of money by investing in successful businesses that are priced right. You know, and there's a lot of philosophy that has been shared by Peter Thiel and others, where they say, hey, should I be a very big market shareholder of a small market or of a small vertical versus, you know, an incredibly big market where, you know, where you have a much smaller market share. No? So the only way to build value is not necessarily by tapping into a very big market. You know, you can tap into a slightly smaller market, but own 80% of it,
sure.
You know, and you can still create value. I think that the discipline that has been used in the last years is very important for companies, you know, to succeed and grow fast. And when you have capital available, it's very easy just to think about, hey, you know, we are passing from one, you know, from a valuation of 20 to a valuation of 100 to a valuation of $1 billion. But in a market like today, as we said before, you know, it has to be much more backed by numbers, no? So it is a different reality.
Yeah. Yeah,
this market is a little bit interesting. In order to build a big company, unicorn or close to, we're a collection of countries here. So any one market is not really large enough to build a company of, you know, the size that we as investors are looking to. So we need each company to be able to, you know, operate in UAE, operate in Saudi, operate in all of the MENA countries, and you know, in a regulated space like fintech, this is not an easy task because you have to get regulated in each one of these markets. So it does take time to be able to build that unicorn because you need to get regulated in each one of these markets. And then the interesting about these markets is that not only do you have like the GCC countries, which have fixed FX, you know, high GDP per capita, so they're very different. You know, customer base than like in Egypt for difference, where, sure. You know, in this time right now has hit, you know, large devaluation of currency, which makes it a little bit more difficult to, you know, raise capital, raise debts, well, and build. So there's been a lot of focus on, especially in the last few years, on the GCC and building the companies there and be able to go between those companies. So for us, what we think about when we're looking at unicorns or building unicorns is how easy is it how can these companies go from one country to another and build within them, and that's how we think you can build big companies here.
Great. Well, let's in the time remaining, I definitely want to talk where everybody's seeing opportunities globally or in this region specifically, what you're excited about, what's coming, where do you see growth, whether it could be involving AI or anything else, or why don't you start from the Airwallex perspective?
Yeah, so for us, it's about focusing on the right stuff, basically. I think that the first thing is about globalization. This is something that is here for and to stay and just going to continue. And since we're a global company, we need to take our customers to different markets and expand. I think that's one area. The second area for us is what we like to call the narrow path. There are specific verticals that we see that we're able to deliver significant value, be it marketplaces and retail, verticals like travel, SaaS B2B, and also fintechs. And I think the last thing for us is, I won't talk about AI, I'll talk about embedded finance. So we are able to power other companies that are fintechs or marketplaces that want to develop their own financial products. And basically through regulation that we go through in every region, we're able to give that platform and they can grow on top of that platform. So those are the things that we are very excited about.
Awesome, awesome. Sonia, you want to?
These markets are interesting because there's still so much to be done here. There's still a lot of white space. And so it's important to kind of pick which subsectors within fintech that we're looking at. So what we've done internally is we kind of looked to see where is the government, where is the influence spending their time and energy. And kind of like where they're, because they all come up with these vision plans for the future. Like Saudi has Vision 2030, the UAE has their vision plans. And that's where the government is now spending their time. So a lot of it is on savings, to increase savings for the people in these markets. Home ownership is also something that's been a concentration on. Capital markets, another thing that people encounter. These are three verticals that we are now concentrating on because this is now, not only are they important sectors, they can be enabled with tech and fintech specifically, and it's also something that the governments that are spending time to encourage their people to build, and so we've been spending a lot of time on those sectors.
Jose, what are you excited about?
Yeah, I mean, for me, I continue to always think about innovation, no? And as I said before, where is innovation coming from today? I have to say that it is hard to compete with the US when you have a very significant part of your GDP being invested, into innovation. But it's also very true that we start to see a lot of innovation coming from outside of the US as well. No? So we are bullish on that trend of being able to see companies that will emerge as global leaders that are not necessarily coming only from the US. Now, regardless of that and that excitement, I still believe that most of the innovation is still going to come from the US. And that's why we like to play our cards the way we do. No? I mean, that's why we are very diversified and we like to play certain markets outside the US, but at the end, we remain coming back. Now, in terms of sectors, everybody who is an investor has been deploying 80% or 90% of their capital into AI over the course of the last 3 or 4 years. We've been very counter-cyclical. I mean, not because we don't believe AI is amazing. We do agree that AI is absolutely transformational. But we have our particular views, and I talked a little bit about this yesterday, on how do we make money on AI. We don't think that we will be making too much money by betting on generative AI. We are more players that are using AI as enablers or investing in picks and shovels of the industry.
Are you encouraging your portfolio companies to be leveraging AI as much?
100%. There's such an incredible opportunity for companies to be able to do things efficiently. And people underestimate what some of the incumbents are doing as well. I mean, people like Etsy, for example. These guys have been amazing utilizing AI for the last 6, 7, 8 years to do matching of supply and demand. No? So there is already a lot of incumbents that are utilizing AI, but there's an incredible opportunity to invest into the picks and shovels of the industry and also to invest in businesses that are dramatically enabled by AI. And that's the way we have played AI. Now, by everybody investing in AI, they open up opportunity, to make money on other sectors, and we've been quite active in taking advantage of that. We are marketplace network effect business experts, and we've been playing our cards strongly in a bunch of B2B businesses. Why? Because we think a lot of companies, that are large businesses are somewhat obsolete in terms of the way they build, and they have to be disrupted. So we've been playing quite a bit of that, and we've been seeing a number of other interesting trends. When I started my first company, we always talked about cross-border commerce. It's only starting to be a reality now, and you know, and it can be attested by the payments. You know, you are starting to see real players like Vinted. You know, there's another company that do second-hand auto parts called Ovoco in Europe. You start to see real cross-border e-commerce, and we're putting some bets into things that are related to that, infrastructure, but also businesses that are leveraging that. Couple of other things, live commerce. Live commerce has been a reality in China, and it has not been a reality in emerging markets, no? Even in the US. So we start to see companies that are successful by going vertical, utilizing live commerce in places like the US. And we've been placing some bets on stuff like that. And continued verticalization of horizontals. We continue to be surprised by how many new verticals can continue to be built. We invested in a company called Alpaga, which is, you know, a marketplace for second-hand kitchen utensils, you know? And the market is significantly bigger than what people expect. So we continue to be surprised by new verticals that could be built, and we're backing. And I think we are also very surprised by seeing companies that are playing categories that are very traditional in a very different way. We invested in a company in France called Bourse Libre. So when you listen something about books, you say, what do you mean? These people want to sell books. Yeah, but these people are playing the category differently, because what they do is they go to people that have restrictions of space, you know, and they say, okay, you know, give me your books, I'll pay you a little bit of money, and then they take those used books and they resell them. No? So we are seeing a lot of opportunity in people that are playing categories that are existing in different ways.
Yep.
And that's kind of to wrap it up. How do we see on the A side, and you know, opportunities that are related to what we do.
Excellent. We just have 1 minute. As far as exits, Sonia, are we going to see a resurgence in fintech IPOs in 25, or do you think IPO market's still going to be held back?
In the region?
Both. Let's talk about the region.
That's always
and
a big question,
Yeah.
Especially from investors that come from outside of the region. Where are the exits? Where are the exits? And we're starting to see them. There's a lot. So we've got our exchanges here, and now people are now listing on local exchanges, which makes it easier and easier for companies to exit. And this is all changing. It's probably too much to say in the time that's left, but it's amazing how the local exchanges are now make it easier for the tech companies to list, and so I think we see some ones that are coming up. We've had a few listings for tech companies in the last couple of years, and they've done well. We've actually chatted about. We just had one yesterday that we know we're watching to see how that does as well. So. In the region, it's happening, it's all coming, and everything is going kind of full circle. We're seeing
Awesome.
the exits coming.
Yeah. Just having spent a week here, the excitement about the local IPO market is pretty tangible. So great. Unfortunately, we've run out of time, but I just want to say thank you very much to all of my panelists, and thank you all.
Thanks.